Welcome back, everybody. Now, if you logged into StockBytes today, you might have noticed we have a new top-rated stock in my default framework, and that stock is Adobe. Now, Adobe is one that people have been talking about a lot over the past few weeks, maybe even month or two, just because fundamentally, when you look at it, it looks really good. And so the question that we're going to talk about today is Adobe actually attractive? Is it getting disrupted by AI or not? And is it an opportunity based on where it's trading at today? So let's go ahead and get started. Now, if we just take a look at Adobe, we can see that, they've really been struggling. I mean, year to date, Adobe's down 21%. Over the past year, they're down 33%. And honestly, if you look at the 5-year, they're down 25% over the past 5 years. And we're talking about a period of time that had the 2021 run-up, the big 2022 drawdown, but then the last 2 years have been extremely bullish in the market. And yet, if you've held Adobe throughout that time, you're down 25%, which is pretty remarkable in a bad way. But then what everyone has been talking about lately is just look at their fundamentals. And if we just take a look at the StockBytes rating, we can see they're good across the board. I mean, you can kind of see why. So on the business side, the revenue growth is over 10%. They have expanding TAM, and they have a dominant competitive advantage. Now, I do think there's a little bit of nuance between those specific items, especially when you start looking out towards the future. But at least where it's at right now today, it looks pretty good. And if we dig in a little bit deeper, we can kind of see this in more detail. You can see that revenue, operating income, operating cash flow, and earnings per share are all up based on their 5-year averages. And look, if you just look at the chart, it's up and to the right? Even the quarterly. And in general, that's a good story. If you look at the actual growth trends, you can see that on the 5-year timeline, revenue growth has been pretty much flat, right? I mean, yes, it's slightly accelerating from Q1 2025, but at the end of the day, this is still a slow decline over the past, 3-4 years. So part of this is about really understanding Adobe's business, right? We know that a big part of their business is subscription revenue, and it's from people who are kind of more creative professionals, but then also enterprises, right? Like Acrobat Professional and all those type of things are used by companies. And just by that nature of that type of product, you're going to have nice, predictable revenue that isn't as volatile when it's just B2C, right? And so that definitely is in Adobe's favor. And if we just take a look at their business segments, you can see that digital media includes their creative software, and that's really the bulk of their revenue. But look, it's up 11% year over year. Now, digital experience is more the analytics and kind of customer CRM type of software that they have. And, that's about 25% of their revenue, and it's still up close to 10%. And if we just keep going to more of their fundamentals, you can see, look, ROIC is at 35%. I mean, this is excellent no matter how you look at it. Obviously, shareholder yield, free cash flow yield, these are very high numbers. And when you look at their debt, no net debt, debt to equity is basically non-existent. And, all these numbers are very good. And then arguably the best story about Adobe is the profitability analysis. I mean, their gross margin is 89%. And if we just take a look at the history of this is a nice kind of upward to the right trend, especially over the past, 18 months or so. So when you just look at the business numbers and even the operations, everything looks really good, right? I mean, at the end of the day, revenue growth is in double digits. You can argue, okay, but there is this slow kind of deceleration over the past handful of years, but still, it's still double digits. And when you look at the operations numbers, I mean, they're pretty much off the charts. I mean, ROIC of 35, no debt, really great margins, and margins that are trending in the right direction. So I can see why people will look at this and be like, look, there's no evidence of disruption in terms of AI and Adobe at this point in time. And if we just take a quick look at their valuation, you can see that across the board, at least with the metrics that I look at, Adobe looks very attractive. I mean, their projected price to cash flow is at a 0.22, which is extremely low. And even their PEG ratio is at 0.25. And even if you just look at the core valuation metrics without growth involved, I mean, trailing 12 months is a 15, projected is a 12, PE's 22 and projected is a 17. And even their price to free cash flow minus stock-based compensation is at 20. And as we can see, if we just look at the historical view over the past 5 years, or even if we do 10, it's basically trading at the lowest price to cash flow it has in a decade, right? So when you look at Adobe's numbers, I mean, everything looks good. I mean, that's why it's the top rated stock in the framework right now. But the question is there a real concern in terms of Adobe being disrupted over the long term as it relates to AI or not? Because what I see is people showing charts like these and they're going up and to the right and they're using it as proof that Adobe's not being disrupted, right? Like, look, their business continues to grow. That means they're not being disrupted. But I think what really would help here is understanding that things take time, right? And the way that you evaluate a stock also really depends on what time frame you're actually evaluating it on. And I saw this tweet the other day that I thought was really good at helping to understand this. And now if we just look at the chart itself, you can see that it says what drives investment results, and it has basically a time horizon, which is the core idea here. And you're like, okay, from quarter to quarter or 1 quarter, it's sentiment change. Now, I think there's some nuance there. I don't necessarily agree with every single one of those, but what I like about this chart is it gets you thinking about, okay, what time frame are you actually interested in when it comes to a stock? Because people will say that they're long-term investors and they're like, you know what, that's a 5 to 10 year horizon, and yet anytime that a company has a good quarter, they're like, oh, look, this is proof that the company's not being disrupted. But disruption is not going to happen in a quarter. It's not going to happen in 2 quarters. And it's going to take time depending on what type of business it is and what type of disruption it is. And so if we look at Adobe's growth trend again, what you see is, look, they were growing a lot faster back in 2021, right? 26%, 22%. Now, part of that could have been because people were home. So creative software was probably getting pushed up by more people being in their homes, wanting to do more creative things. And as people have gone back to work, this has gone down a little bit in terms of growth, right? I mean, it's still growing, just not as fast. But when you also take into account that they have a lot of business customers in these groups as well, then you understand that the disruption for Adobe, if it is going to be disrupted, is going to take a little bit more time. Now, I've seen comments before where people were like, oh, well, AI's been around for 2 years and things still aren't being disrupted. I would really push back on that a lot because yes, while these chatbots have been available for that time and you have a lot of early adopters, people like myself who have been using them for, a couple years now, I would argue that the vast majority of people still really don't understand what it is at all, at least not in a way to where they're actually making meaningful changes in their behavior because of it. Because still, the way that most people probably interact with AI today is through Google search and the AI summaries at the top of the page. And yes, you have things like ChatGPT that are popular and kind of exploding in usage. But again, what we're talking about here with Adobe is actual professional level creative software, right? So you're going to have an industry that's going to be a little bit slower to change, and so it's going to take time. It's not going to show up in a graph of, this past quarter or the past 10 years even. So this gets back to the heart of the matter and the real question of, is Adobe going to be disrupted by AI or not? And of course, they're talking about it a lot as a core part of their future and their business right now, where they say AI represents a tectonic technology shift and presents the biggest opportunity for Adobe in decades. Our strategy to harness AI is focused on infusing it across our category-leading applications to provide more value and delivering innovative new AI-first products. And if that playbook sounds familiar, I mean, in some ways, it's kind of like the Google playbook, right? Of look, we already have billions of users, even though Adobe probably doesn't have billions, but Google had billions of users. They had all the LLM technology. They were refining it, making it better, and infusing it into all their products already. So you get immediate distribution. And look, Adobe's going to do the same thing. They already have creative professionals who love their products or who like their products enough and keep using them. So the quickest way to maintain kind of your edge and your lead is to just include AI into the products that they already know and love and try to make them better. And according to Adobe, that strategy is starting to work. They're saying that we're seeing accelerating adoption and usage of Adobe Gen Studio, the most comprehensive content supply chain solution as enterprises drive content velocity with AI. And also continued adoption and momentum for AEP AI Assistant with 70% of eligible AEP customers using AI Assistant. So clearly they're seeing some headway and some positive momentum of customers using their AI products. And for a company that is probably right in the target zone of potential disruption, that's a good thing for Adobe. But I've been talking about AI and software for over a year now, and I've said that I think there are companies that are going to be ripe for disruption. Salesforce was one of them that I mentioned, and Adobe's actually another one, and the reason is this. As nice as Adobe's profitability and margin graph is, this 89% gross product margin is absolutely an opportunity. Like we've all heard the Jeff Bezos quote of your margin is my opportunity, right? And so when you have a software company that's at a 90% gross profit margin and they're in a place that's like right in the middle of the Gen I kind of wave where a lot of this, AI compute is being pushed towards, then it's not a stretch to think that this margin at some level is going to have to come down. Now, I will say Adobe has a lot of good things going for it. Like we said, they have a lot of enterprise customers. That means it's a little bit more sticky. They have a lot of subscription revenue. Obviously, that means it's a little bit more sticky. And they're, quite frankly, the industry leader in creative software. Now, the question is, at what point does that kind of change? And does it change? Because to me, the challenge that Adobe is going to have is going to be similar to Salesforce. They are absolutely dominant right now. They have a suite of products that their customers really love. But what's going to happen is as software becomes more of a commodity, you're going to have a lot of different competitors pop up. And they may not even be competitors for every single thing that Adobe does, but they'll be competitors in pieces of what Adobe does for much cheaper, maybe even up to 80 to 90% cheaper. And so ultimately what that does to Adobe is it's going to put pressure on these margins, right? And the question is not if Adobe's going to go away and they're going to be, bankrupt or anything. That's not what I'm saying. What I'm saying is once those margins are under pressure, all of a sudden you can't quite charge as much if you want to stay competitive. And so your margins have to come down. That likely means your multiple is going to come down, even though their multiple is down a lot right now. And so the question is Adobe going to be as attractive of an investment in 5 years as it is today? And of course, I don't really know the answer to that, but the way that I've been looking at this is there are two things that can be true at the same time. I do think that Adobe over the long term is going to get disrupted. And once we get out about 5 years or so, they're not going to be nearly as attractive as an investment as they have been in the past. But then number two, if we're talking about Adobe today, I actually do think that it's attractive as an investment, assuming that you understand what your timeline is and what your goals are in buying it, which gets back to this graph, right? I mean, at the end of the day, if you're saying, you know what, I'm looking at Adobe right now and I'm looking over the next year, maybe even 2 years, is it likely to get disrupted over the next year? No, probably not, right? I mean, these things take time. When you have enterprise contracts, that takes time. When you have a whole industry of creative professionals that are used to using this product, yeah, those things take time, right? But that doesn't mean that it won't happen. And so if you're looking at Adobe and you're like, you know what, I'm going to hold Adobe for the next decade and it's going to be an amazing investment, personally, I don't believe that that's going to be true. However, if you're saying I'm looking at Adobe over the next year, 18 months, maybe 2 years, and I think it's going to have market-beating returns, I would think you're probably going to be right. So if we just look at Adobe's chart, we can see that, it's been on a downtrend for almost a year and a half or so, or almost 2 years maybe. And I mean, that's a pretty long downtrend. And at the end of the day, stocks go up and down, right? I mean, you look at any stock chart and there's going to be some kind of up and down movement, regardless of what's happening, even with the narrative. I think that's part of the challenge is that we try to assume that every single stock price movement is based on something fundamental or based on, some news of some sort. And sometimes, like I always say, it's just traders trading. But the probabilities are at some point, this price is going to come back up to test the 20-month average, right? And that's, clearly up to about 450 right now. So even if you didn't look at anything fundamentally about Adobe, just the odds are that it's going to try to come back up at some point, even just to kind of test those resistance lines, right? So I think this is a combination where you have a stock that fundamentally looks really good. I think there are questions in the future about are they going to be able to maintain the growth and the margins that they have today? That's my personal opinion. Others may disagree. But if you're looking for a way to say, look, this is simply an undervalued company that is still performing relatively well or really well, depending on what you're looking at, then yeah, it's probably a relatively easy way to make money over the next 18 months or so. Now, obviously, there's no guarantee of that. This price could also come down to this 200-month average as well, and that would be a big loss. But that's why understanding what your actual time horizon is for Adobe is critical, because if you are saying, look, I'm going to hold this for 10 years, which I think it's really hard to say that anytime you buy something, even if that's our intent, a lot changes over 10 years. You should probably be revisiting your thesis on a regular basis, right? But look, just because they had a really good quarter doesn't mean they're not going to get disrupted or even a good year, because again, those things take time. And just be clear about what timeline you're actually investing in, or at least what timeline you're going to revisit your thesis to know if it's still intact or if it's time to kind of look elsewhere. Now, in terms of if I'm actually going to be adding Adobe to my portfolio, I don't think so. And most of that is because I didn't really have a great experience with Adobe just as a customer. I used to have Creative Cloud and all that type of stuff. Trying to cancel my subscription was really a pain. They have those cancellation fees, or at least they used to. I don't know if they do anymore. And trying to get that software off of my computer was like ridiculously hard. It was almost like a virus. It was terrible. It was almost like malware. And just, as a computer guy, that didn't really sit with me well. Now, obviously, that's a very anecdotal and personal experience that I had myself, and you may have a totally different experience with them, and it may be great. So obviously, do what's comfortable to you, but clearly, based on the fundamentals, based on the valuation, Adobe looks attractive. They're, in my opinion, going to get disrupted over time. However, it will take some time. And so if you're looking on a shorter time frame, then yeah, I personally think it's likely to bounce and probably be a decent return, at least over the next 18 to 24 months or so. So what do you guys think about Adobe? Do you think they're going to get disrupted over time, or do you think that it's all noise and they're really just going to continue being dominant? Let me know down in the comments below. Now, if you want to see my breakdown of Duolingo, another stock people like to talk about a lot, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.